What's going on, you guys? RJ with RJ's Trades. As promised, we just hit 1,000 subscribers not too long ago. So I got 4 free classes for you guys. And this is going to be class number 1. We're going to start off talking about chart patterns, okay? I'm going to name this series something. I'll probably name it something like 1K worth of game. Yeah, let's do that. We're going to name this 4-part series 1K worth of game, right? So basically what I'm going to be doing here is I'm going to show you guys exactly my thought process, and I'm showing you guys everything that I do to make money in the stock market, all right? I've been doing this since 2019, so I'm going on past my 6th year now. So I'm going on my 7th year, so I've been doing this for quite a long time, right? All I ask you guys to do is to continue to like and share this. Leave a comment if this is helpful, right? I'm not holding anything back. Whatever I know, I'm going to tell you guys. I don't got no notepad, no pen. I'm giving it to you straight out the dome, all right? So you guys, make sure you guys leave me a like and a comment, man. Thank you guys so much for getting us to 1K. Let's get straight into it because I don't know how long I'm going to be, all right? I'm just going to talk until I can't talk no more. Okay, so when you are trading in the stock market is very predictable. It's unpredictably predictable, or predictably unpredictable. I don't know, whichever one. It's both at the same time, right? So the stock market moves in ways that aren't new, right? A lot of times in the stock market, things are going to move the same way that they did in the past, okay? So when we're talking about chart patterns, it's very, very important to understand that these things are not a coincidence. It's human behavior, okay? Humans make these candles shaped like this, and humans see these types of patterns and things like that I'm going to show you, all right? So I want to kind of just say that first, and I also want to bring to your attention that all of this is probability, okay? Think about trading in probabilities, all right? I'm going to be showing you guys plays and certain setups that tell you that the stock is more than likely to go up or more than likely to go down, but always realize that there's still a chance that it can go the other way. All right, they're never going to be 100%, but I'm going to give you some that are probably like 70-80%. Not going to lie. All right, so I'm going to tell you guys all I know about chart patterns. I'm super excited, man. Let's go ahead and get started here. Before we get started with chart patterns, I would be doing you a huge disservice if I told you about chart patterns if I didn't tell you about the basics, okay? So really you really getting about 5-6 classes. I'm not gonna lie to you because I'm gonna break it all the way down for you, all right? Hopefully I can break it down in a way you can understand. Before we get into chart patterns, it's important to understand the basics, right? Chart patterns are made of the basics, okay? So when you don't understand the basics, you can't understand chart patterns. You can't understand your strat, whatever. You can't understand your Bollinger. You can't understand none of that stuff if you don't understand the basics. So what are the basics? I'm just going to talk about a few things. Make sure you guys check out my videos, RJ's Pillars of Options Trading, for everything in depth from the basics. But the things I'm going to talk about today is understanding candlesticks, understanding trend lines, and understanding levels, okay? Because if you can understand those 3 things, just those 3 things, you can understand chart patterns, okay? Chart patterns are made of a combination of trend lines or a combination of a trend line and a level, okay? So let's get started first talking about candlesticks, all right? Candlesticks are the number one thing to understand. It's not your it's not the anything besides the candlesticks, okay? It don't matter what strategy you got. It don't matter if you do the Fibonacci. I don't care if you do the bull flags like I do. I don't care if you do the strat. If you don't understand candlesticks, you will not be successful. You have to understand the basics. How are you going to go out there and run before you learn how to walk? Okay, that's where a lot of people are going to get caught up. They don't understand the foundation, okay? Candlesticks, number 1. You have a bullish candle and a bearish candle, okay? Now, there are so many different names for candlesticks, and I'm going to tell you this right now. It doesn't matter what the candlestick name is, okay? There's only a few things that matter about a candlestick. It matters where it opens, where it closes, where are the wicks. That's it. In some instances, the color doesn't even matter. All right? What matters? 3 things. where it opens, where it closes, where are the wicks. Okay, now stay with me because this is gonna all tie in together. I'm gonna try to make it quick here so we get the chart patterns. All right. So when you're looking at a candle, of course, when you have a candle that is big red candle or a big green candle, usually that shows you that it's strong buyers or strong sellers, okay? But a thing that people don't understand is wicks, okay? So what are the wicks? Wicks are those long, skinny parts that come from the bottom or the top of the candle. Some of them have a bottom and a top wick, okay? Now, what do the wicks tell you? The wicks tell you that at some point in time, for that time interval that you're looking at, that stock was at that price, okay? So if I could take an example here, we'll use this candle right here. Notice I'm on the daily time frame, okay? So each candle represents an entire day worth of data. You got a lot of data. Notice I can go back as far as I want to go here. We can go back as far. We're in 2020 now. I could keep going back, keep going back, keep going back, okay? So you have a lot of data when you're looking at something like a daily chart. When you look at this candlestick right here, this tells you that on Thursday, the 25th of September, at one point in time during the day, SPY's price was way down here at 654.4. And at one point in time, the price was all the way up at 659. Okay, but what did I say matters? It matters where did it open, where did it close, where are the wicks? All right. So quick lesson on candlesticks here. You have a green candle. That means that the stock opened one spot, but it closed higher. Okay. It opened one spot, but it closed higher than it opened. All right. So that means at the end of the day, after all of this movement, SPY opened right here around 657.93 and closed somewhere around 658.05. Okay. All of that entirety, I just summed up, what is that? 7-8 hours of movement for you in 30 seconds to a minute. Okay. This candle, let's take this candle on September 17th. It doesn't matter if it's red or green. You need to understand, what does the candle itself tell you? Where are the wicks? Where did it open? Where did it close? Okay. It opened right here. This is a red candle. So a red candle tells you that it closed lower than it opened. Okay. It opened right here, 660.14-ish. I might be a little off. It closed 659.14. At one point in time, the price of SPY was way down here at 654. At one point in time, the price was way up here at 661. So SPY moved a lot that day. Okay. These 2 days, SPY moved a lot. All right. Now, I know you guys know about, you've heard of pin bars. You've heard of hammer candles. You've heard of haramis. Listen, Doji can't, none of that, it does not matter. You need to understand what the candle itself tells you. Okay. Those three things: where did it open, where did it close, where are the wicks? When you have a long bottom wick, that tells you that buyers are stepping in. You have buying pressure. All right. When you have a long top wick, that means sellers are stepping in. You have some selling pressure. So what does that mean if you have a long bottom wick and a long top wick? Indecision. That's what a doji is. It's an indecision candle. Okay. So when you have, even if you have a red candle like this, look how long your bottom wick is. Even though the candle is red, this is still a bullish type of candle in my book, because look how long your bottom wick is. That means that the sellers push this all the way down, but the buyers said, no, we like it up here. All right. So they pushed it all the way back up, and you see SPY had a few days that it actually ran after that. Okay. That's very quickly about candlesticks. All right. That's all I'm going to say about candlesticks. Next, I'm going to talk about, I want to go levels or trend line next. Let's do levels next. Okay. Let's do levels. Levels. You're going to hear me say levels a lot, but when I say levels, I'm talking about support and resistance. All right. Support and resistance is super, super, super important, right? If I had to say what's the most important, I would say number one is candlesticks, and number 1A is support and resistance. You can literally do nothing else but learn candlesticks and support and resistance and make money. I guarantee you. All right. Support and resistance. All right. RJ, what is a support and resistance? A support is a place on a stock that the price had a tough time going below. So think of a support as a floor, right? Let's think of it like a hotel. Let's say we on the, I don't know, we on the 3rd floor. So we got some rooms above us and below us, right? Right. All right. So a support is the floor where we are now. The resistance is the top point, right? It's a ceiling. It's where you're going to have trouble going above. Now, what happens if you fall through the floor? If you're on the 3rd floor and you fall through the floor, you going to the 2nd floor. You going to the next support. Catch that. If you shoot up, you jump up off the bed and you hit your head through the ceiling, you going up to the next place of resistance, right? Okay. Now, why do I call them levels? I call them levels because it can be a support in one place and it can be a resistance in another place, okay? I call them levels because they can change. This same spot can be a resistance in one place and be a support somewhere else, okay? And I'm going to show you an example of that, all right? There's one more thing I want to tell you about support and resistance. Support and resistance also tells you how far you expect a stock to go up or down. Why is that important? That's important because as options traders, we are betting on the stock to go up or we're betting on it to go down. Most of the people are not betting on it to go sideways. There are strategies that do that. Most people are betting on it to go up or down, but the thing about options is you have time against you, right? So if you in a weekly option or a 2-week out contract, you can't afford for the stock to go sideways for 2 weeks. You have to know where at on this chart is this stock going to start moving. That's what I'm going to show you. Where at on this chart gives me the best chance to know that this stock is going to start moving right now, or it's going to start moving pretty quickly around here. That's what's going to be important. When you find out where it can start moving, you need to see how far can it go. Because think about an option, you're going to be making money for every dollar that the stock goes up or down. So if you know that a stock can only go up 50 cents before it gets to a next resistance, say stock A and stock B. Stock A, from one resistance to the next resistance, you have 50 cents. Stock B, from one resistance to the next resistance, you have $10. Which one are you going to trade? I hope you say the one that you have $10 to run. Okay? All right. So support resistance is super, super important. And let me show you guys an example of support or resistance here. Let me think of something that has it here lately. SPY definitely probably has it. But I want to think of something better. FTNT might be a pretty good one, maybe. Okay, this is actually a good one. So FTNT, we actually banked on this stock last week, right? Or 2 weeks ago now. We banked on this stock last week, FTNT. If you take a look at this stock, I'm just going to show you guys a point here that has a support or resistance, okay? If you look back right here, right? Look right here. Right around here in this area, I'm going to highlight it for you. I'm going to highlight it for you. In this area right here, notice that 78.2 was a resistance, okay? Notice that we kept coming up here and touching and coming back down. When I do my support resistance, I typically like for my wicks to hit, right, at least 3 times, okay? And it's not going to be perfect because support resistance are pretty much like exact points. It's not going to be perfect. But if you can have the area where the wicks or the ends of the candles are hitting at least 3 times, you got a good area, okay? So if you look here, we got 1, 2, 3, 4, 5, 6, 7, 8, 9 times in this little spot right here that this was able to hit, okay? So it had trouble going above. Notice that I said when it goes up from a resistance, it's trying to go to the next one, okay? What did this do? This absolutely took off. Think of the resistance like pressure built up. The longer that something stays under a resistance, when it pops, it's going to go, all right? When it pops, it's going to go, all right? Notice that about levels, all right? Now, also note that I told you guys a level, I like to call it that because the stock can come back and be a support at that same place that it was a resistance. Let's take a look. Notice FTNT, we finally broke out. We went crazy, okay? It went from 77 all the way up to 83, 84 in 1, 2, 3, 4 days. Now, why is that significant? Take a look at this. Look how long this was in consolidation. So this was in consolidation from August 22nd, 2024, all the way until it broke out in October. This is why it's important to know your levels. If you didn't know that this was a resistance right here, you are getting killed on your contract, and this might not even be able to save you. First of all, you would have to have a contract towards the end of the year to make money on this if you didn't know about levels. Secondly, you probably would have got frustrated and sold anyway. You probably wouldn't held that long anyway with it going sideways in a $2 range for months, all right? So understand levels, all right? Notice when we broke out, we came back down, and notice that when we came back down, we came back to our same line, and this turned into a support. What is a support? A place where a stock has had trouble going below. So it was a resistance. Now it came back and turned it into a support. It said, okay, the buyer said, all right, we do like it here. Y'all want to bring it back down? We're going to take it back up again. And notice when the buyers said we're going to take it back up again, look what happened. Boom. Took off, right? Took off. Okay. So that is support and resistance. Let me see if I can find one more example. I want to find something that maybe was recent. Let's see. What's something recent? I don't think it was anything recent. Actually, FTNT wasn't a bad one. That was recent. Even if you look right here on FTNT recently, what we played. If you look here, it came back to this same exact. Notice that I didn't change the line. This same line is the same one that I'm using from 2024. I told the group, I said, hey, I know it looks a little iffy right here. Trust the chart. I say it's holding up here. Every time it tried to get below, they popped it right back up. It started to hold. I said, hey, hold it. It's going to go. And it's starting to go here now. All right. Even here, you had another little resistance that formed right around here. Right around 81.2. Notice every time we got here, then smack, smack, smack. But notice, when we started to creep up and we started to break out, we got our move up, okay? And it's trying to move up now. So when things break support or resistance, it's looking to go to the next one. Keep this in mind. I'm telling you, I'm telling you all of this for a reason. It is all going to tie in together, okay? It's all going to tie in together, all right? It's all going to tie in together. So that is support and resistance, and that is candlesticks very quickly, okay? The last part right before we get to our chart patterns, I know that's what you guys want, but I cannot tell you guys about chart patterns until I tell you guys about this stuff. All right, trend lines are super useful as well, okay? So trend lines give you a very good point to where a stock can possibly bounce or where a stock can possibly reject. Okay, so I'm gonna show you guys an example. I'm gonna show you guys something here. We're gonna take lift. We're gonna take lift. Now, a trend line is either going to be moving in the upward direction or the downward direction. If it's moving upward, it will look like this. It'll literally look like a staircase, right? So you kind of want to treat it the same way that you do with the support or resistance. You typically want it to be touching at least 3 times. I can't think of one that has a good example right now. Actually, this one may have it. This may be a good example here. I don't even remember. I can't think of one that has a great example at the moment. But a trend line, you typically want to see the exact same thing that you saw with the levels, okay? You want to see it touching at least 3 times, okay? Now, the more it touches a trend line and it doesn't break, the stronger it is, okay? And that goes for both the upside and the downside. So let me show you this right here. I'll show you Tesla. Y'all like Tesla. Everybody love Tesla when it's going up, right? Look at Tesla. Notice here that Tesla had a line right here that it had trouble breaking. Okay, so Tesla had trouble breaking this trend line right here to the downside. This downward trend line. Notice every time it was getting up here, it was getting smacked. Boom, came down. Boom, came down. Came down. Right here, it broke out. It came back down again. But when it got to this line, what did it do? Look what it did. Now I'm about to tie some stuff in. We about to see you paying attention. When it came back down, look at your candlestick. It came back down and it turned it into a support. All right. Look at this candlestick right here that told you. Look at this long bottom wick. What I said long bottom wick means. I said a long bottom wick means that buyers are stepping in. All right. Now I don't want to lose you, but I want to make sure you're paying attention. Where are they stepping in? They are stepping in at the place that used to be the resistance. This was the resistance. It broke out and turned it into a support. And you know what happened to Tesla, right? Everybody knows Tesla is flying. Okay? This is no different. This is no different than what happened right here with FTNT. Same exact thing, except this was just the levels. That was a trend line. Okay? Notice we're putting this stuff together. We're putting together the chart patterns. We're putting together the candles. We can get to chart patterns here. We're putting together the levels. We're putting together the candlesticks. We're putting together the trend lines. Okay, all of this stuff ties in together. And when we get to chart patterns, I'm going to show you how all of this stuff works together. Okay, so I hope you're following. Let's do one more example here. Let me show you guys something else that everybody's all of a sudden been talking about. Lift. All right, even lift. If I show you guys this right here, now I got to zoom out heavily on this one. So this is the weekly chart on lift, and I believe we can go from up here. We can't. I don't think we go that far. We might be able to actually. Take a look at lift right here. So lift right here. Look at this. Since 2019, lift, every time it was hitting this yellow line, it was getting smacked right here. Now this is a weekly chart, so every single candle represents a whole week of data. Now notice I'm showing you what happened in 2019. Lift hasn't broken out until 2025. So Lift respected this trend line for 6 years. This is why you have to know and understand your charts. For 6 years, Lift really hasn't been worth playing. It really hasn't been worth playing. Besides, this was a nice run, but after this run right here, Lift hasn't been worth playing in 4 years until this year, recently. Okay, so look here, resistance. I'm gonna zoom in on it so you can see just how much resistance is actually there. Look at this. Every time you get up here, you can't break it. It's a resistance. You can't break it. So for 6 years, it's been bottled up, building up energy. Okay. Now look what happened. Look at the kind of reaction that we got when we were finally able to break out. Now, if we zoom in just a little bit, look at what we have again. All I did was change my time frame down to the 1 day chart. Look what we did here. We broke out. We came back down to that same spot that was a resistance. And what is the candle? Look at that. We tied it in together. We broke out of the place that was a resistance. Look at the candle that we got when we came back down to that same spot. Number one, look at these two candles. Two things that I love right here. Number one, right here, you have a long bottom wick. What does that mean? Buyers stepping in. So buyers step back in at this place that has been a resistance for 6 years. The next following day, Lift opened lower. Okay, it opened on the previous day. It opened here, closed here. The next day, it opened down here. Notice a green candle means that the stock price closed higher than it opened. So it opened down here. So it was actually a red stock at the beginning. It closed up here. So that's another pattern called a engulfing that we may talk about today, or I may save it for the next class. All right. So this gave you two super bullish candles in a row on the daily, and look what followed. This may not look like a lot. You say, man, that's only 16 to 22. Yeah, that's, what is that, a third of the stock? More than a third of the stock? Stock prices rose over 20, 30%, in a month. All right. So understand, this is important, man. Understand your candlesticks, understand your levels, understand your trend lines. Okay. Notice the things I'm showing you guys is all momentum based and it's probability based. All right. So when I'm talking about these different candlesticks, notice that when I'm looking at this, I'm saying, okay, if I see this, is it more likely to do this or this? Trading is a bunch of if this, then that. If this, then that. All right. If we would have got a bearish candle right here, I probably would not have thought it would have been bullish at all. I'm not trying to predict what it's going to do before it happens. I'm reacting to what I already see, and then I'm going off of that to say, okay, since I see this, this is what is more probable to happen. Since I see this, this is what's more probable to happen. It's all about probability. Okay? Everybody drop down in the comments, drop the word probability. All right? You're going to hear me say that over and over and over and over. If you're in my Discord, you know I say this pretty much every single day. It's all about probability. All right? So that is what I had to tell you before I got to the chart patterns, okay? Now we can get to what you guys want to know. Here you go. Chart patterns. Let's talk about chart patterns. Now I'm going to give you, how many am I going to give you today? It's 2, 4, maybe 6. Maybe about 6 to 8 chart patterns. I give you 6 to 8 chart patterns. All right? Now these are the ones that happen the most. These are my favorite ones, or these are the best ones that you're going to play. Okay? Now, let's get into it. All right. Once again, guys, all I ask you to do is to leave a like, comment, and share this with someone. All right. Share this with someone that is just starting out, or if you just starting out, leave me a comment and let me know if it's helpful. All right. I have more videos that go in depth about those previous topics that I talked about before we get to the chart patterns here. Okay. So chart patterns. Notice that I said earlier, chart patterns are made of two things. Chart patterns are made of a combination of trend lines, or it's made of a combination of a trend line and a level. Okay. Why do we use chart patterns? We use chart patterns to tell us what's more likely to happen in the stock if this happens. Okay. It's used to increase your probability. Okay. Now, when you start mixing in the chart patterns with the levels, that's when you get powerful. All right. And I'm going to show you guys how to do that. All right. Chart pattern number 1 that I'm going to talk to you guys about is my favorite one. And you guys may already know. I'm going to tell you guys about the bull flag pattern. Okay. The bull flag pattern. We'll do bullish patterns first, then we'll do bearish patterns after that. Okay. Chart pattern number 1, bull flag pattern. You guys drop bull flag down in the comments with some fire emojis or something. All right. A bull flag. What makes a bull flag pattern, and what is it? Okay. What is a bull flag pattern? A bull flag pattern is a continuation pattern to the upside. So when you see this pattern, it's more than likely to continue in the upward direction. That's what it tells you. When you see this, the stock is more than likely to keep going higher. All right. So what does it look like? Pretty much all of the patterns that I'm going to show you are going to look similar. All right. What you want to look for when you want to play momentum, because this is what these are. These are momentum type trades. Whether you play this on the daily chart, it can be found on a 5 minute. You can find it on a 1 minute. I have tons of examples of it on every time frame, literally. All right. No matter where you want to play it, this is the setup that you want to see. All right. Number 1, you want to see a stock have a nice run up. That's number 1. Okay. And Lyft actually might be forming it. Lyft might be forming. I didn't even see that. Lyft might be forming. But what you want to see first is you want to see the stock have a nice run up. Okay. Now, after the stock runs up, it's going to pull back. All right. It's going to pull back, and you're looking for it to pull back and consolidate. What does consolidate mean? Consolidate means that the stock isn't really going anywhere. It's just kind of chopping back and forth It's going to be coming down just a little bit slightly, but it shouldn't be coming way back down. So if you started down here, you moved up here, it shouldn't be coming way back down here. That's not a flat no more. That's a reversal. Okay. So what it will look like here, just like this, is literally going to look just like a flag. Literally just like a flag. It's going to look just like that. All right. And just so you know, I'm not making none of this stuff up. Let's type in bull flag pattern. Okay. Images. What do you see right here? What do you see? I like this one. You see this start here, run up. You see the consolidation. You see the continuation. Okay. This is what you're looking for. You're looking for the run up, looking for consolidation, and then you're looking for it to break out. Okay. So you may say, RJ, well, what is this? Like, what is this? The bull flag pattern is really, it's a combination of the trend lines. So that's the first one that you're showing. This is just a combination of trend lines. Okay. So understand that these two trend lines here are going diagonally to the downside, right? So both of these trend lines are going in the same direction, which is going to be important because, listen, it's going to be important because this one is going to be opposite way. All right. Both trend lines are going in the downward direction slightly. It doesn't need to be coming way back down. All right. When it pulls back, the place that you are really mainly looking to enter is right at the breakout point, right? Right at the breakout point. Because remember what I said earlier, your trend lines can act as a level. It can act as a support and resistance. So a lot of times when it breaks from that trend line that it was having trouble breaking, it's going to go. All right. So you're looking to enter the bull flag when it breaks out and you are targeting your next level. Okay. When it breaks out of your pattern, you're looking to target the next resistance, the next support, depending on the chart pattern. Okay. Now you may say, RJ, that's BS. That don't work. Okay. Watch this. I got tons of examples, but just the latest example is one that we literally played on Friday that I gave away for a free play. Okay. JNJ. Take a look at JNJ. Crazy run up. Now, what did I say? It needs to consolidate. What do you see here? What is this forming? This is a bull flag pattern. Okay. And look at this candle right here that we got on Friday. Notice it poked its head out just a little bit on Thursday. But look at Friday. When it broke, it was gone. Okay. When it broke, it was gone. What's another example? Here's another example. Here's SPY, right? Let me show you one on SPY that I played a long time ago at this point. It's a long time ago now. Here. SPY. Nice run up. Okay. Push up. You don't chase the push up. You wait on the pullback. Okay. It pulls back. It forms your flag right here. So you're looking for the stocks that have had a nice run up. Don't go looking for a flag in something like this that's chopping. You're looking for a stock that has ran up significantly. Okay. So it ran up significantly, pulled back. Look at that. You got your pole. This is called a pole. Look at your two trend lines. And it broke out and it hasn't looked back since. Okay. It hasn't looked back since. Besides these 2 days right here. It hasn't looked back. Okay. Now, Lyft actually looked like it may be trying to form that. What do we have? We have our pole. We have our run up. When you see a stock that has a run up, that should start intriguing you. That should say, okay, a stock can't run forever. It's going to cool down. When it is done cooling down, I need to be in it because the probability is on my side that it's going to keep going. And until it shows me that it's not, I'm going to keep betting on it to go up. Why jump in front of a moving train? Why are you trying to stop a moving train? Right? Okay. What do I see with Lyft? Crazy run up. Look at that. We got to play to watch. We got to play to watch. Now, Let's tie it in. What did I say earlier? I said when a stock breaks a resistance, it's looking to go to the next one. Where is the next resistance? Here, we have to go back to find it simply because Lyft is at a place where we haven't been to in 3 years at this point. So Lyft hasn't been to this spot in 3 years. And the more I'm looking at this play, the better that it's looking. Okay. If I take a look at Lyft right here, this is actually an A+ play. I just found a banger on here while I'm with y'all. Look at this right here on Lyft. This right here is actually a gap. Okay. So Lyft gap down and there's like no trading motion in here at all, hardly, besides when we peaked above just a little bit. Okay. So this is a plus setup right here. So it actually has a gap. So I would say, me personally, I would say the next level is all the way up here at 30. 30. I didn't say, that's what the chart said. Okay. So you're looking at another 30%, 40% move on Lyft if it continues upward. Come on now. Your savings account give you 4 to 5% a year. That's if you got a high yields. If you don't got a high yield savings account, you getting 0.4, 0.5% a year. We're talking about a stock that can move 30, 40%. Look in your calculator and look how long it would take you to get that in a regular bank. All right. So boom. We have a bull flag. All right. We have a run up. We got our pattern. We have our pattern that tells us that the stock is more than likely to go up. We know where our resistance is. Look at here. This was the previous point right here before the gap. And look where we rejected from and started coming down right here at this spot. So this tells us that if this thing can hold 22.76, if it can hold that resistance, we should be on our way to 30. We should be on our way to 30. Now, does this mean that it's going to do that? No, it's probability. Just because we have a 80 to 90% chance of it happening, you still got to prepare for that 1% that it don't. It is what it is. Okay? This is an A++ setup that I just found here live with you guys. I ain't even looked at Lyft yet today. I ain't even made the watch list today. All right? It's Sunday that I'm recording this, but you guys probably won't see this until Monday or Tuesday. All right? A+ setup here. Above 22.76, where is your next level? How far can this go? 22 to 30. That's almost $8. Almost $8. Now, here's the kicker. This is some more game. This is 1K worth of game, man. Y'all drop a like, comment, and subscribe. I'm giving you guys all the game that I think of coming out the dome. I don't got nothing written down. I'm telling you guys all the stuff I know. Just say thank you, okay? This is the thing. You say, okay, where's my next level? Is that enough for me to make money? 22 to 30 on Lyft. $8 on Lyft is different from $8 on Tesla. What I want you to do, pause the video right here, take a look at Lyft contracts and calculate with $500. I'm going to say if you got $500 for options, say if you got $500 on options, let's say 2-3 months out. I don't know, right? If you got $500 for options that are 2-3 months out, how many contracts can you get of this that has a delta? The contracts need to at least have a delta of 30 to 40, bare minimum. Take that same $500, go to Tesla, and go 2 to 3 months out with $500. Let me know what kind of contract can you get that has a 30 to 40 delta, and how many can you get? I'm going to go ahead and I'll give you a second. Hopefully you went and looked by now, but the answer is probably none. You probably can't get any contract on Tesla 2 to 4 months out for $500 that has at least a 30 to 40 delta. So this $8 move on Lyft with $500 is probably going to be equivalent to a, I don't know, $60, $70, $80 move on Tesla with $500. You have to say, okay, is this a lot for this stock? Is $8 a lot for Lyft? Yes. But $8 on Lyft might not even be as much as $8 on Here we go. I'm gonna give y'all some game, man. $8 on Lyft is not the same as $8 on CGC. CGC is a dollar stock, right? So it's a dollar stock. $8 move on CGC is not as good as an $8 move. I'm sorry, an $8 move on Lyft is not as good as an $8 move on CGC. An $8 move on Lyft isn't as good as an $8 move on Tesla. It's relative to the stock. All right, this some game, man. This some game. This ain't even just chart patterns, man. This is just trading one-on-one. This is 1K worth of game, man. That's the name of this thing. 1K worth of game. We giving y'all chart patterns. All right, that's the bull flag. I gave you guys exactly what it looks like. This is how you play it. This is what you look for. You still are incorporating your levels. That's it. Okay, and kind of how do you want to kind of confirm it? You want to confirm it kind of with the volume. Okay, so you kind of want to see the volume increasing as you are, especially as you have the run up. When you have the pullback, you want to see the volume decrease. So you see how you got the volume here starting to come down. Absolutely perfect. On the run up, we got volume starting to come in. It's starting to increase. When it pulls back, we're decreasing. This is exactly what you want to see. Exactly what you want to see. Okay, A++ setup. This is on my watch list for the next few months. Maybe gonna be in the year with a banger. So we'll see. All right, Lyft looks amazing. That's the bull flag pattern. Put that in your notes. That's my favorite chart pattern, hands down. All right, let's go to the next one here because I don't want this thing. This man might go on forever. Oh my goodness, I gotta hurry up. All right, next chart pattern quickly is going to be the pennant pattern. All right, the bullish pennant pattern. What does that look like? I'm gonna put it right beside the bull flag because people get these confused. The bullish pennant pattern looks very similar, but the bullish pennant is gonna be like this. I always mess up this drawing. Oh man, I might mess up the drawing again. The bullish pennant pattern is going to look something like this. I can't draw it. Oh, I can't draw it. Okay, that looks half decent. All right. It looks something like this. Now, what's the difference between this and this? Notice here, the trend lines. So this is another pattern that's made of the trend lines. Here, this pattern, you have the top trend line is going downward, but the bottom trend line is going upward. So the key is, what does that mean? The bull flag pattern is a bullish continuation. The pennant pattern is a neutral pattern, okay? Because those two trend lines, this is why we learn this stuff before we get the chart patterns. You have to know what the trend line is telling you. A upward trend line is telling you that the stock is moving up. The downward trend line tells you that the stock is moving down. So which one do you choose? Number one, you choose the side that it has came from, okay? So since this is a bullish pennant pattern, you're looking for it to break upside. Now, it doesn't mean that it has to break upside. It can break downside because it is indecision. The triangle pattern shows indecision in the market, okay? So it's a bullish triangle pattern, all right? You're looking for the same thing. It's the same exact process. You are looking for it to break above, and you're using your levels as a place of entry and as a place of where can this go. And of course, you don't have to always hold till it hits that level. You'll make plenty of money from 22 to 23 or 24. You'll make plenty of money just from that little move, okay? You make plenty of money from that. You don't have to hold all the way to the, end target. You need to be setting targets in between, okay? So it'll look something like this here, because I want to make this super, super long. It's going to be bouncing inside of all this right here before it breaks out and pops and goes crazy. What's a chart that had a triangle pattern? Tesla. So take a look at this. I'm going to show you guys this recently, and then I'm going to show you guys this from in the past. Tesla, look at this. Crazy up move. There you go. 221 all the way to 369. Crazy up move. But look at this. What do you have? This trend line acting as a resistance. This one acting as a support. It broke out and it went stupid. There you go. You want to see another one? Let's stay with Tesla. I want to show you a bullish triangle pattern here. Let's stay with Tesla. Oh yeah, 2024. Let's go back here. Look at this. Tesla's been making triangle patterns for a long time. Check this out. Nice move up. Downward trend line right here. Upward trend line right here. Gone. Look at that. Look at it again. Did it do it again? I think it did it again. Uh-oh. What did it do? Gone. Look at it again. Look at this again. Tesla. What did it do? Gone. And what do we have here? Look at Tesla. Man, we got to go all the way back. What do we have again? Gone. I didn't even talk about the levels here, but that'll be your homework. Go through these stocks. Look at these. Look at these patterns I just showed you on Tesla. It is known for making triangle patterns. I made that well aware on Instagram and in the group chat that Tesla was known for these triangle patterns. So take a look at the levels here. Find your levels on Tesla and tell me that Tesla gonna hit those levels. All right. Tell me that Tesla gonna hit those levels that you find on the daily chart. That is your bull flag and bull pennant pattern. All right. Now, let me give you. All right, let's go ahead and talk about the bear flag and bear pennant. All right. The bear flag is, these are going to be bearish chart patterns. Okay. The bear flag. Now, notice we had a bear. We had a bull flag. Now we're going to look at the bear flag. So the bear flag is the complete opposite. It tells you that the stock has a high chance to come down. So what does it look like? It looks like the stock has fallen and it comes back and it pulls up, sort of say. It pulls up and then you're looking for it to continue in the downward direction. But here's the key. And I'll go ahead and tell you guys this now. I was going to hold on to this, but I'll tell you this now. The key to chart patterns is playing your chart patterns with the overall market. So take a look at how SPY and QQQ are trending, and that's the way that you want to play. If I take a look at the market now, I guarantee you, you will not see very many bear flags. Why is that? You're not going to see many bear flags because the market's at all-time highs. The markets are bullish. You're going to see a lot more bull flags, a lot more bull pennants, a lot more falling wedges, a lot more inverse head and shoulders, which I'm going to show you, you know, those couple chart patterns here. All right. So when you're in a bullish market, this is so important, man. Y'all drop some fires in the chat, man. We are in a bullish market. Look for bullish chart patterns. When you're in a bearish market, look for bearish chart patterns. You want things to have confluence. You want it to add up because you're adding to your what? What's that P word? Probability. Probability is everything. Okay. When you can have more things lining up that say, okay, well, if I got this and I got this and I got this, why would I bet against that? Right? All right. Play with the overall market and you will be successful. All right. Play with the overall market. So the bear flag here have a down move, consolidates, and you're looking for it to break down again. I don't even know a stock that has a bear flag right now. I don't think any of them have a bear flag. I probably have to go back to when the market crashed to find some. Yep, exactly. So look at this. When the market crashed, down move. Look at that. Look at this right here. Boom. Boom. What did the market do? Tank. Chart patterns. Levels. All right. You can go here in between on your SPY. Look at your levels and look what was hitting. We came down and hit a super key level, and that's what Trump sent out the tweet. That was the bottom. Go take a look at it. All right. Bull flag, bear flag. The bull flag and bear flag are the patterns that you're going to see the absolute most. You're going to see that the absolute most. And then followed by the triangle. All right. Flags and triangle patterns are number one. You literally don't have to trade anything else. Most of the things that I play are flag patterns or triangle patterns to this day. All right. Now, I will also give you guys here quickly, because we've been in for a minute now. I'm going to also give you guys the bearish pennant pattern. It literally the same type of thing, the same concept. Always remember that if I can draw it, I don't even think I can draw these things right, man. I can't draw the triangles for nothing. That shit isn't bad. That ain't that good, but it's alright. It'll do. It'll do. I don't like it. Anyway, your bearish pennant pattern or your bearish triangle pattern is still a neutral pattern. Flags, continuation, pennants, neutral. Okay, it's a neutral bearish pattern that tells you that the stock can still go either way. Which way do you want to look for it to break? The direction that it came from. So since it was a bearish pattern, it dropped down. You're looking for it to continue to the downside. Okay, so when I see a bearish pennant pattern, which I don't even know last time I seen a bearish pennant, you're looking for it to do this. Okay, and how do you play it? The same exact way we played the other patterns. You're looking for the levels and you want to add confluence by using your levels. All right, if you can find a pattern that's near a level, that's just going to make that pattern even stronger when it breaks out. It's just going to make it even stronger when it breaks out. All right, so all in all, really, a lot of times it doesn't even matter about the pattern. It matters about seeing the momentum and seeing the consolidation. Because whenever you can spot the consolidation and you can use the volume when it breaks out, there's your play, right? So it's not always about making sure it looks like a perfect flag or a perfect pennant. You got to notice the up move or down move and notice the consolidation. Then you have to have the patience to wait on it to break out with the volume. That's all it is, okay? So notice that I'm saying that it's just chart patterns, but it's not just chart patterns. We're talking about chart patterns, but we're using it along with trend lines. We're using it along with levels. We're using it along with the overall market. It's a lot more to it than just seeing shapes. It's simple, but it's hard at the same time, right? What I say earlier, this is the the hardest, simplest thing, or the simplest, hardest, whatever. Okay, so it's easy, but it's not easy. It's easy until you do it alone, right? All right, so I'm gonna show you guys two more chart patterns here, real quick, and these don't happen as much, but they do happen. All right, the first one, I'm gonna give you guys a bullish one. This is called the inverse head and shoulders. Okay, so you have a inverse head and shoulders, then you have a regular head and shoulders, and I can show you an example of both. All right, so the inverse head and shoulders is a bullish chart pattern that is going to look just like this. The candlesticks are going to form, and you're going to see it kind of looks like a face a little bit, and you will kind of see the stock. I don't even know if I can draw this right. Stock could be moving like this. It's actually not a good drawing. Okay, that's not bad. Actually, that's not bad. The stock will be moving something similar to this. Okay, so it's made up of a head. This is the inverse head. This is the inverse shoulder, and a neckline. Okay, and the neckline. So notice I said chart patterns are made up of combinations of levels and trend lines, or a combination of just trend lines. Okay, so once it breaks the neckline, aka the resistance, is gonna go. All right, you want to see a live example? Let me show you guys so I'm not lying here first. All right, inverse head and shoulders. Look at that. What did I just draw? What did I just draw for you? Right here, inverse head and shoulders. Left shoulder, right shoulder, head, neckline, breakout. All right, here's another one. Left shoulder, right shoulder, head, neckline that acts as a resistance, breakout. Okay, now what's a real example of this happening? Everybody's favorite stocks, right? This is like the most bandwagon asset of all time is Bitcoin. Look at this. Shoulder, head, right around here, right around this area. It's not perfect, but right around this area was the neckline, And you can see when it broke out, could have caught a very nice move from about 109, 110 to 123. All right. Very nice. Very nice. SPY actually had a inverse head and shoulders. This was a couple years ago. Oh man, I don't even remember where it was. It was in like 2022 or 2023. Yeah, this was some time ago. I don't remember where to find it right now. But that's your inverse head and shoulders, okay? So that pattern doesn't really pop up nearly as much. Notice that we're focusing on the flats and pennants. Those two that's the bread and butter. All right, I'm just kind of throwing some stuff in your toolbox here at this point. Inverse head and shoulders, bullish pattern. It needs to break the neckline. Now, you have one more pattern that I'm going to show you guys today before we wrap up, and that is the regular head and shoulders. The regular head and shoulders pattern is a bearish chart pattern that tells you that the stock is likely to fall. Okay, so this is what that looks like. It's literally the opposite. It's literally the exact opposite of the inverse head and shoulders. I'm going to use the same exact line. Okay, so you'll have shoulder, shoulder, head. All right, shoulder, shoulder, head. Now notice that it's above the line here, so the line is actually a support now. All right, so the stock will be doing something like this. You know, it'll pop up, consolidate, come down, back to the neckline, consolidate, and you're looking for it to break right here at your neckline. I could probably just bring that down. All right, you're looking for it to break the neckline or the support to fall to the next support. What's something example that just had this? Actually, I think QQQ had it, if I'm not mistaken. Boom. So you didn't get too much of a down move because obviously, like I said, you want to play with the overall market. But this was an example of one that had it that gave you a brief down move. Look at this. Shoulder, shoulder, head. All right, move it down so you can see. Shoulder, shoulder, head. Now, where is our neckline? Let's see. We got a clean neckline here. We don't have a super clean neckline, but this isn't terrible. It's not a super clean one. You probably have to use a trend line for it more than anything, to be honest. Yeah, kind of got to use a trend line more than anything, but as soon as it broke, you see we had a nice down move, but you know, overall market is bullish, so didn't get too much of a follow through, but that is a nice drop from 597, came all the way down here to 588. The market falls faster than it goes up, right? And it's not a whole lot of head and shoulders patterns at the moment because we're at all-time highs. Play with overall market, man, okay? So as I wrap this up, because I've been on here for, I don't know how long I've been on here now. To wrap it up here, before you get to chart patterns, you got to understand the basics, all right? Candlesticks, levels, trend lines. I have videos on all of these, all right? Go through the YouTube, go through the pillars of options trading, all right? When you understand that, you can start understanding that chart patterns are nothing more than a combination of trend lines or a combination of a trend line and a level, all right? When you have your flags, your pennants, your head and shoulders, inverse head and shoulders, you want to play the patterns that align with the overall market. If the market is at all-time highs, don't be looking for no bear flags. Don't be looking for no head and shoulders. Don't be looking for no bear pennants. Try to stay with the overall market. The trend is your friend to the end. Which I say, period. The trend is your friend to the end. All right? Trend is your friend, okay? So that's really what I got for you guys here on the first class here. I got 3 more, all right? So the next one is going to be, do I want to do the break and retest next, or we're going to do day trading and swing trading? We may do swing trading next. We might just do swing trading next, okay? Because you're going to see that I just showed you guys pretty much what I do. The only other strategy that I use is the break and retest, which we might do that last. Next class is probably gonna be swing trading. I'll release this in a few days. So that's what I got, man. Guys, I noticed here I didn't bring up a single indicator. I love to show people how you can trade without all the fluff, with minimal chart usage. Okay, we're looking for momentum. We're looking for consolidation. We're looking for breakouts. We're looking for levels. That's really it. All right. Don't make this harder than what it already is. If trading was easy, everybody would do it and everybody would be profitable. But we know that's not the case. But I'm here to help you guys get on the road to that. All right. RJ's Trades, man. 1K worth of game. Make sure you guys leave a like, comment, and subscribe, man. 3 more classes, and they're just gonna keep getting better and better and better. So let me know if you guys like class number 1. I'll see y'all in the next one, man. Peace.